Wall Street Journal's marketing reporter Patrick Coffey indicates eccentric and alarming trends in the promo coverage of Bitcoin ETFs. The most anticipated investing products might be targeting terra incognita via mainstream social media platforms. Facebook, Instagram might join Google search in Bitcoin ETF advertising. So don't forget to subscribe, like, and share, and let's start. Starting off with is Robin Williams mocking the US banking industry after the great financial crisis over 15 years ago. He would have owned Bitcoin, RIP to a legend. Next up, exactly 380 years ago, the Dutch tulip mania hits an all-time high before slowly crashing to $0. Meanwhile, Bitcoin is up 400 million%, has millions of global users, and has endured for 15 years straight. Two markets, no comparison. Next up, I bought this Porsche for 8 Bitcoin. At that time it was worth $230,000. Now the 8 Bitcoin I paid is worth over $350,000. All I'm saying, the Bitcoin is growing while the assets you buy with it are dropping in price. That's what you need to understand. You need to invest, not buy something for fun. When you're going to be on the level of Elon Musk, you would understand that you don't need to buy all these nonsense cars, houses, and all of that stuff. That's what you will understand when you're gonna get rich. Anthony Scaramucci predicts 170,000 Bitcoin post halving. Next up, according to the reports, Facebook and Instagram may soon begin permitting ads for Bitcoin ETFs. This comes after Alphabet's approval of such ads on platforms like Google and YouTube. Alphabet began approving ads for Bitcoin ETF on its platform, which include Google Search and YouTube, in the US following the SEC's approval, according to a spokesman. Facebook and Instagram may soon follow suit, as parent company Meta Platforms is currently updating its US policies in light of the SEC decision, as spokesman said. Bitcoin returns are diminishing. Everybody can see this, including Bitcoin maxis. Their job is no longer to cater to people with less than 300,000 of Bitcoin. They're now trying to get governments to give it the next 3x. Altcoins are where the real juice is. The great is here, the good is here, the dog shit is over here, JP Morgan coin over here. So all I'm saying, the Bitcoin is growing and it will be continuing on developing more and more. Halving events are crucial in shaping the crypto cycle, and we're just about 70 days away from the next Bitcoin halving. It's the perfect time to delve into the past and present the forecast what might be on the horizon. Understanding the impact of halving is critical. Each halving slashes the new Bitcoin entering circulation through the mining rewards, reducing the influx of Bitcoin in the market. This often triggers a supply shock, sparking a significant price surge until it peaks and the trend reverses. So setting the stage for the next cycle, as for a clearer picture, let's turn to the chart from PucaChart's TradingView users, and it shows that while the Bitcoin's volatility tends to decrease with each cycle as its market cap grows, and the overall pattern remains consistent. A mini bull run kicks off around the year before the halving, followed by an even more significant surge in the year after. So history tends to repeat itself in the crypto world, and at this time there are extra factors that could push prices higher. The Fed's interest rate hikes have halted, with cuts likely on the way. Plus, the approval of Bitcoin's ETFs make it easier for retail investors to get in on the action. And in summary, now's the time to get your halving strategy in order. With the proper preparation, you can make the most of this pivotal event in the crypto cycle. That's what you also need to understand. Next up is, I can't wait to hear the fairy tale of how Blockstream issued 21 million Bitcoin. Even though Bitcoin isn't issued and total supply has not been mined, yet Bitcoin is Wiz, not Bitcoin, as I bet Blockstream are going to enjoy their tax bill for being issuers of 21 million Bitcoin in 2017 at a price of $2,700 per coin. Next up is Bitcoin following the 2015 and 2019 market cycles, as from 2015 a low Bitcoin climbed 12,000% in 1,000 days, and from 2019 low Bitcoin climbed 2,000% in 1,000 days. So 2022 low is done, and now Bitcoin looks ready for 100k per Bitcoin right there. Bitcoin ETF ads might appear on Facebook, Instagram, WSG says. So exchange-traded funds based on spot Bitcoin ETF are targeting baby boomers as a prominent part of potential audience. As the SEC greenlit Bitcoin ETFs in the US, the largest social media platforms might be considering publishing their promo materials. And in his latest long-read, crypto marketers have a new target audience. Your mother, Patrick Coffey of Wall Street Journal's tracks how the asset managers behind the 11 Bitcoin ETFs in the US are expanding their campaigns to make them visible to boomers. This demographic cohort includes the generation of people born from 1946 to 1964 during the mid-20th century baby boom. Due to the specifics of boomers' media consumption patterns, this captivating ad campaign will not look like FTX promos, and with a football legend Tom Brady and NCAA's superstar Deshaun Hyler. So for instance, one act demonstrated a fictional conversation where a mother asks her son about new opportunities to buy Bitcoin, while Bitwise published a promo video with Jonathan Goldsmith, the most interesting man in the world. However, the opportunity to run that campaigns on the mainstream social media without the risks of being shadow banned or having the account terminated is one of the most inspiring novelties for Bitcoin ETF marketing. And while Alphabet's Google Search and YouTube have already begun greenlighting Bitcoin ETF ads, Instagram and Facebook might join the club soon as coffee ads. Grayscale's GBTC dethroned by BlackRock first flipping in Bitcoin ETFs, and according to a spokesman cited by the WSG reporter, the parent company Meta Platforms is currently updating its US policies to make Bitcoin ETF promo campaigns compliant. As covered by You Today previously, Bitcoin ETF ads appeared in Google Search last week, as this novelty is part of Google's lifting ban on crypto advertising. And meanwhile, the emerging segment of Bitcoin ETFs saw its first revolution on February 2, 2024. Grayscale's GBTC, which is the most well-known Bitcoin-based investing product as a successor of the eponymous OTC traded trust, saw its trading volume eclipsed by BlackRock's IBT. And BlackRock's iShares Bitcoin Trust posted an impressive volume of 219 million, which is higher than that of Grayscale's as Bitwise and Invesco's products combined. Also, Bitcoin ETFs swap to enter the Bitcoin ETF market as Vanguard and State Street diverge. In a strategic maneuver in the ETF arena, key players Schwab, Vanguard, and State Street are taking different paths in the spot Bitcoin ETF competition. As ETF Store's president Nate Gerassi provides insights into industry dynamics, suggesting Vanguard's caution and questioning State Street's tactical decision, while noting Charles Schwab's preparations to enter the Bitcoin ETF space. So, potential ETF plans of Vanguard, Schwab, and State Street. According to Nate Gerassi's recent post on X platform, 3 of the top 5 ETF issuers, Vanguard, State Street, and Schwab, are steering clear of the spot Bitcoin ETF race and accounting for nearly 50% of the industry market share. Notably, Vanguard isn't engaging with Bitcoin, a decision reaffirmed by a spokesperson who stated that a company doesn't offer a physical gold ETF either. And on the other hand, State Street, is Gerassi's opinion, has made a major strategic misjudgment, potentially to avoid competing with existing gold ETFs like GLD and GLDM. And on the other hand, Charles Schwab is positioning itself to enter Bitcoin ETF arena. While Gerassi anticipates Schwab's eventual launch, he doesn't provide a specific timeline, as this move aligns with industry expectations and Schwab aims to capitalize on the growing demand for cryptocurrency investment options. As the industry landscape evolves, Schwab's strategic decision could significantly impact its market positioning and investor appeal. That's all the information we have on today's video so far. See you in the next one, and peace.